Hi, I'm Irk, and this is my channel Get Irked, where I teach you how to invest for the long term. Before we get too far, if you could take a minute and just smash that like button, that would really help me out. Thanks so much. Also, consider subscribing to my channel for more updates in the future. As always, I'm not a professional investment advisor, so take all of the information in this video as educational and entertainment purposes only. In today's video, we're going to talk about investing in ESG. You've probably heard of this trend of investing in ESG in the news, and you might not know what it is, so let's do a really quick recap. ESG stands for environmental, social, and governance. The concept is that capitalistic companies will use their funds to make positive differences in the society and the world that they operate in, while still taking in mind both the effects that they have on the environment and how they can benefit their investors and stakeholders. While this concept is fantastic for the overall betterment of the world, you may see the news stories that refer to something called greenwashing. This is when companies aren't really practicing ESG, but just kind of giving lip service by doing a really small project or just talking about what they're doing. The other problem, as much as I really like exchange traded funds or ETFs when it comes to investing in themes, they don't work as well here. In fact, there are rumors that some ETFs that claim to be focusing on ESG actually contain oil companies in them. In addition to oil companies, some ESG ETFs also have individual companies that might not actually be considered good practices of ESG. For example, a lot of people might think one of my holdings, Tesla, would have a high ESG score. And if you go to certain rating agencies, they are rated above average. But here's the problem. Tesla isn't actually a good practicer of ESG. Now, while the products that Tesla makes, both in terms of batteries and in terms of the cars themselves, are good for the long term in getting us off of oil, the amount of damage that lithium mining does to the environment is extreme. And right now, although certain mining companies claim that they've figured out sustainable methods of doing this, there is no research that backs this up. In fact, nobody in lithium mining really knows how bad the environmental effects could be because they're scaling so fast as the demand for electric vehicles starts to go higher and higher. As we scale up, we don't know what's going to happen to the environment as a result of lithium mining. And that's just Tesla's environmental exposure. If you look at their corporate governance, you have a CEO who's incredibly unpredictable, will jump from topic to topic, will often talk about things that aren't related to the company, resulting in different fluxes in other markets, as well as damage to his own stock. Now, I like Elon Musk. I think he's a genius, but I think he needs to get his head on straight. He needs to focus on his company and stop running around like a crazy person. Elon bounced back and forth from supporting Bitcoin to a couple of weeks later claiming that he didn't realize the environmental impact that Bitcoin had, to a couple of weeks after that supporting Bitcoin again, to liking Dogecoin, to calling it a scam. He keeps bouncing back and forth. He should be focusing on his company. He should be focusing on Tesla. In addition to that, there are members on his board of directors that are family members, which completely defeats corporate governance. And you regularly hear news stories of employees at Tesla companies who are suffering from very bad working conditions. None of this makes Tesla a good ESG company, in my opinion. Now, I still like Tesla as a company, I like their products, and I like their long-term prospects, but it doesn't really qualify as an ESG investment in any of my portfolios. That's not why I hold Tesla. So what's my approach to ESG investing? Well, I do enjoy investing in individual companies, so I make sure I keep an eye out for news stories or projects or things about specific companies that I really enjoy. I also keep an eye out for things that might not work as well. Let's look at some real-world examples of companies that are doing good things in terms of ESG. First, let's start off with environmental. And for that, just as an example, I'm going to use Microsoft. And you might think, wow, Microsoft, really? Absolutely. Recently, Microsoft came out and said they would be carbon negative by 2030. That means they're going to enact enough projects and take enough action that not only will they make themselves green from here on out, they will go back to the company's inception in the 1970s and make sure they do enough carbon reclamation that they're going to credit everything that the Microsoft company has ever done since its inception, plus go zero and below zero. They're going to actually have a positive impact on the environment instead of having a negative impact on the environment. Now, let's talk social. And for that, we're going to look at Salesforce.com with its amazing CEO, Mark Benioff. Mark Benioff is almost the innovator of the idea that corporations should do things that help society. Since the beginning of the pandemic alone, Salesforce bought $25 million worth of PPE from China for United States medical workers. And in just the last couple of weeks, Salesforce filled a 747 with PPE and incredibly important medical equipment and sent it to India. Since the very beginning, Mark Benioff has had a practice of having a large percentage of Salesforce's profits go to nonprofit and charitable activities that help all of society. Salesforce is a great example of a company that focuses on helping society and really fills the social part of ESG. Next up, corporate governance or governance. Now, there's a lot of different ways you can look at governance. You can look at it in terms of what do the investors get out of it. You can look at it in terms of what do the shareholders or stakeholders get out of it. I like to think of it as the whole package, and I tend to focus on how does the company treat its employees. For this, I have two examples. First up, Starbucks. A couple of years ago, Starbucks partnered with Arizona State University and now offers free college to its employees. Think about how incredible that is. Not only do the employees not have to pay for their college education, but it results in Starbucks having an even better trained workforce because they're learning on the job. Even if they don't stick around, it still helps Starbucks in the long run, and it's an incredible thing for them to do their employees. The next example is Costco. Costco treats its employees so well that it's lowered the turnover rate, which actually helps Costco as well. They don't have to pay to train new employees, and their existing employees are happier and more loyal to stay at the company. Recently, Costco announced that they would be raising the minimum wage for their employees to $16 an hour. That means that the starting wage is above the minimum wage for pretty much every state in the union. Costco regularly goes out of its way to look out for both its customers and its employees, and really sets the example for corporate governance. There are a lot of ways to invest in ESG. It's a matter of finding the way that works for you. I hope this video helped you out. Please watch my other videos and subscribe. Thank you for watching, and I'll see you in the next video.